Hello, welcome to the yet another video on the market crash 2020 and what next. The big question is what next. So we are going to see in this video that what is my personal strategy and how I am playing this volatility, right? So before we begin, I have received a lot of questions since last couple of days. So what FAQs will we be covering? The first one is, can anyone predict the crash? The second one is, what can be the possible reasons for the crash? Is market bottom out yet? Are we in recession mode? What will be our next strategy? Which stocks to prefer for the next bull run? This is very important because many people are asking that is the market has been crashing, so we should buy some stocks for the long-term portfolio building. So we'll discuss that also. Stay tuned and watch till the last. Some do's and don'ts which I would be recommending in this market scenario, right? So let us first understand, before we begin, let us see the risk disclosure. The views are personal and should be used for educational purposes. Any part of discussion should not be used as an investment advice. Investments in capital market are subject to market risk. Please consult SEBI registered investment advisor before investing. So whatever we are speaking or we are discussing right now should be considered for the purpose of education only. Okay, so the first question is that can anyone predict the crash? The answer is pretty simple. No one can predict the crash, but there is one indication before the fall, that is Nifty PE ratio, also known as the stock market valuation. So if you see, we have uploaded a video on 1st of November 2018 because we felt like there was an alarming situation and the Nifty PE was at rocket high, around more than 26 points. So we were very skeptical about the market and the bull run was shaky. Any small or big events can result into the huge selling or corrections. So if you see the heat map of Nifty PE analysis, you can see that before fall the market PE was very high and after the fall it has started gradually falling, right? And if you see here in 2016 probably, or I would say 2015, the market PE has been more than 20 and gradually it has crossed the 25 levels and sustained above that level. So a huge correction was expected any time sooner or later. If you see, you might have seen this post in our Instagram or Twitter handles, right? We have shared our observation on this Nifty PE and Nifty performance chart, that whenever the market has fallen, it has recovered in a very short period of time. If you see in 1992, 54% fall was there and the recovery was around 125% in just 1.5 years. So you can see that this is undoubtedly a buying opportunity, but how we'll play it, we'll see it in the next slides. And if you see the PE ratio in 2000, before the fall the PE was around 27 and after the fall it made a low of 13.65. So 2008 it was 26.55 and after the fall it made a low of 12.4. In 2010, the PE before the fall was 25 and after the fall was 17. So in 2020, we are at rocket high, or we can say we are at the all-time high PE, that is of 29.25. So what can be the possible PE, right? I would be entering into the market if the PE reaches 15-16 odd levels, right? I want to know your views, so drop a comment in this comment section below. So as on date of this recording, that is 13th March 2020, the Nifty PE was at 22.66. You can easily check this PE on the NSE website, right? So what can be the possible reasons for the crash? So we can say that why is not important than how. We are looking for how we can enter into the market rather than why market is falling, because as such what we as a retail investor or trader gets the information is very adulterated information, I would say. So it is better to just focus on our strategy rather than predicting the reasons, what is the possible reason for the market crash. And there are many reasons, but the main one which is affecting is the coronavirus and it needs no introduction. The next question is, market has bottom out. Can we go for bottom fishing? Have I missed any buying opportunities? So these are a couple of questions which I keep on hearing, that I have missed the buying opportunity and the market will go up and there is no point now to invest. So these are the questions which I usually hear from my clients or the people around me. Again, the answer is no. Remember, the train is not leaving the station. So wait for some good quality buying levels. I would strongly suggest you all to wait for some good levels to buy your preferred stock, because even if the market fall will be stopped, then there will be some price correction or some time correction wherein the market will spend lots of time at this 9,000 levels or even 8,000 levels. It will not easily go to directly 11,000, 12,000 levels. That is what I personally feel. So we should wait for the right time and right opportunity to invest. The next question is, are we in recession? So the answer is yes, we are in recession, but it is cyclical recession. It is bound to happen in all the developing and developed economies, right? And if you see this through the Nifty chart, that is Nifty monthly chart, whenever the market tumbles 20% in consecutive trading sessions, we are already in recession phase. And if you see here, the Nifty has broken the two higher lows and it has tested the third lower low also, right? So I would personally say that we have basically entered into the downtrend and we should not be looking to catch this falling knife. The next one, the $1 million question is that what is our strategy in this market scenario? What is our analysis, right? So the first, I would suggest some levels which are very strong and we should keep an eye on this level. The first Nifty monthly chart shows that the nearest support zone is around 8,300 to 7,800 levels, but I am little skeptical. It can go little less also. There is a possibility that we might see around 6,750 to 7,000 levels also, right? That can be a possibility. The next chart which I am going to show you is of a Nifty monthly chart, but in this chart I will show you that how you could have known that we are not going up and the interest of the strength of the buyers are losing with each higher high. If you see carefully here, there is a divergence pattern in this Nifty monthly chart. Each high in the monthly chart is creating lower high in RSI, that is the relative strength index indicator. So if you see here, the prices have made all-time high in around this level, and our Nifty chart is also making a high. RSI chart is also making a high. Then the Nifty level has made another high, but the RSI chart has made a lower high. And if you see, compare this levels here and here, this one and this one, you will see that the RSI is creating lower high consistently, and this is known as the negative divergence. And the last part of the Nifty chart is that if I observe the Nifty daily chart, it is filled with gaps. Gap down are the strongest resistance points, and it shows that how the market are ready to sell at any given price. So I would suggest that people should not be trading until and unless these gaps are filled with the heavy volumes and heavy price action. Let us see the Bank Nifty instrument. Bank Nifty is the most liquid instrument in the world, and I'm not happy with what the charts are showing me personally. So based on some technical levels, I would say that the support zone is around 19,000 to 17,000 levels, but I strongly feel that the speed with which the Bank Nifty is falling, it could see some worse level also. So probably, yes, my view may not play out in the near future in couple of weeks or even months, but I would be avoiding Bank Nifty and the banking stocks for some reasons. The next chart which we are going to see is of Dow Jones Industrial Average, and the first zone which I feel is around 20,200 levels, and the next zone is around 18,800 levels. The best question which I am listening or people are asking me is which stocks to pick for the next bull run. So the next bull run is gonna come for sure, and we want to be part of this bull run badly. Everyone wants to be, right? And there is no harm in it. So let us understand that I have selected few stocks, and please don't consider as this as the buying advice or investing advice. It is just my observation and what I will be looking for in the coming months or weeks, right? So the first chart is of L&T monthly chart, and the first buying level which I see for the long term is 950 to 800 levels. The next chart which I am going to discuss is Maruti. I would be preferring to buy around 4,500 levels. The first level has been tested twice, so I feel that aggressive buyers who just want to go long in Maruti can buy at 5,500 levels, but I would be personally wait for around 4,500 levels. The next chart is of D-Mart, that is Avenue Supermart, one of the big good company having a good corporate governance and a good brand name attached of Radhakishan Damani. So I would prefer to buy this stock at around 1900 levels. Yes, there is a possibility that it might fall even more than that, but I would be happy buying at 1900 levels. The next stock is of Marico. Monthly chart, again it is showing me some levels around 200, and it is a good FMCG company which you can keep an eye on, and 200 levels which we are expecting. You can see this level very soon. The next stock is the ICICI Prudential, and we are targeting this stock at around 330 levels. This stock is the market leader in the insurance, life insurance part, and for that reason we are keeping this stock in our basket. Another stock which is a close competitor to ICICI Prudential is HDFC Life. We have not included in our portfolio analysis, but you guys can keep an eye on that. The next stock is the Dabur. Dabur is a very good, strong fundamental stock, and one can look for a buying opportunity around 350 levels and below. ITC is again one of the Nifty 50 stock, which is FMCG stock, and I see that there is very least chances of this stock going further down, so I will be very aggressive buying this stock, and my levels are 150. If I see IRCTC, because it is a new listing, I have very less data, so my analysis is based on the weekly charts, and my buying zone would be around 1050 to 950 levels, around 1000 rupees, and I would be in that stock if I want to. The Infosys is again a very good stock, and one should look buying this stock at around 600 levels, and the another level which we can look after is around 500 levels if it comes that below. The chances are pretty less, but the markets are supreme. If I see Reliance, I would be buying Reliance at around 850 levels and 750 levels. Many people are arguing when I say that we should wait for Reliance to buy below 900-800 levels. They are like, Reliance can never go down than 1000 points, 1000 rupees. But I feel that is not the case, because hard times are for all industries and all stocks. If I see Tata Motors, I would never be investing in Tata Motors. But the thing is that people have a huge demand of Tata Motors. I would suggest to buy this stock below 50 and keep a hard stop loss of 20 rupees. If it goes below 20 rupees, then you should book your losses. Else, that is your discretionary view, whatever you want to do. So there are some do's and don'ts which we'll be focusing into. Wait for the opportunity in coming weeks. Buy in 4 tranches. That is, if you have 400 rupees, then invest 25 in each big fall. Market is sell on rise. With each fall, it is good to accumulate Nifty Bs. Any given day, you can accumulate Nifty Bs, because Nifty Bs are basically you are purchasing a unit of Nifty. So the common logic is Nifty can never go to zero, right? So you can buy and hold, and you will have a good sleep at night too. And this is an investment opportunity, as many quality stocks are available at mouth-watering valuation and prices. So yes, this is an investment opportunity, but with patience. Keep stocks of FMCG sector in your watch list, because in every recession, majority all the capital intensive or B2B models might go, or they might face some hard times, but FMCG sector will always be in good demand in recession period especially. Some don'ts which I would be recommending is avoid trading till the market settles. One should avoid trading, especially the intraday trading, because market is very volatile and it will just ruthlessly hunt your stop losses. Some stocks are gonna fall hard and would not recover fast, so avoid such stocks. Yes, there are many good stocks with good valuations, good fundamentals, yes, and yet those stocks would not recover fast because the market conditions are such. So you should avoid those stocks, because time correction is worse than price correction. In price correction you might see some good falls and some good recoveries too, but in time correction the stock might stay at a certain range for a couple of period, that is some years also, right? We have many evidences in the past. Rises are not start of the bull run, but it is just a technical pullback. So if the stock market rise by 5, if the nifty gains 5%, then you should not be jumping into the market stating that it is the start of the bull run, because there has to be some technical pullbacks also. The correction can be price wise or time wise, so avoid stock with huge exposure to some recent problems. As I said, avoid banking sector as of now, because in each crash banking sector is the one which falls the most. And moreover, bank nifty has the highest weightage in nifty, that is of 30 to 35%, and that is my reason why I feel like that nifty is not going anywhere, leaving 9,000 levels. My view will be negated once nifty closes above 11,000 levels. Till the time I am bearish in the market. We have launched our company. Just to give you an introduction, the name of our company is ProfitFolio. It is a premium trading house where we trade based on our proprietary, discretionary and algo based trading systems. We trade 360 degree, that is all the segments and instruments. We are best known for our managed account service and trading and investing related consultancy. My name is Nisar Kotecha, and you can contact me and follow us on the below mentioned addresses. See you guys in the next one. Keep yourself safe, and prevention is better than cure. So last suggestion would be to avoid public gatherings and keep the hygiene uptight.